Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Darshan Desai. Darshan is the COO and head of risk at Beach Point Capital, a $15 billion credit shop based in Santa Monica, California. I caught up today with Darshan to go over all things that are on his mind, and we cover a lot of ground. He discusses his career path, which began at York Capital, his move to Kansas City to work for BATS, and then finding his way to Beach Point in 2010. Darshan shares his experience and learnings from seeing two firms ramp up assets and people. I was curious to speak to Darshan as he's also the head of risk, making for a unique opportunity to talk about data analytics, how to be a risk-oriented COO, and why they outsource their entire middle office. We close with the importance of IQ and EQ when building teams and how COVID changed the way he manages others. Please enjoy my conversation with Darshan Desai. Darshan, it's great to see you.
Thanks for having me on, Scott.
So tell me about how you made your way to Beach Point.
Graduated from Pace University in downtown Manhattan and not too far away from Wall Street. I studied finance. I was fascinated with the stock market from an early age. Just wanted to be around the buzz and energy with the hope of being part of that industry. While at Pace, I had a number of jobs. I sold suits at 21st Century department store there on weekends, which was a lot of fun. I also was an RA at school at the dorms, and I had an internship at Merrill Lynch as well during the weekday. So I got to know the folks at the career services department at Pace pretty well. And so during my senior year, I got a call from that department saying, hey, you got to come down here quickly. We just got a job description for an internship opportunity at a hedge fund called York Capital Management. So I ran down there, submitted my application. It was nice that they gave me the first look at it. This is around 1998, 99. And at York, at the time, York was really small. They were managing approximately $400 million in AUM. They had less than 10 people in the organization, around 12 different accounts, some commingled side by side, a few SMA accounts. And their primary strategy at the time was merger arbitrage. And so I went out there and met with a few people, one of which was the founder, Jamie Dinan. We had a good conversation. I thought we were hitting it off. And in the middle of our conversation, he stops and just says, hey, Darshan, I've got 100 applicants. Why should I give you the job? I didn't hesitate. I said, hey, I'll work for free. And I meant it. I meant it. In my head, I just wanted a foot in the door. Well, I got the job. I got paid. And I remember my first day. I remember the head HR woman walked me through to trade desk, which was really small because he only had Jamie, a couple research analysts, senior folks around him, and a trader. And in the back, you had the controller and the CFO. So then he walked me over to my area, which was right behind them. And I'm not kidding, they gave me this massive metal tanker desk. No computer at all. It was just a stack of prime brokerage documents, highlighters, a pencil, and a ruler. And the controller came over to me and says, hey, this is your job. You're going to be ticking and tying transactions through these reports and writing down and highlighting whatever doesn't match. And I loved it. I'm like, okay, let's go, game on. I'm just surrounded by talented, highly motivated investors. And sitting behind Jamie, seeing him and hearing him talk to his team and listening to all that banter about putting positions on, taking positions off, hearing the trader execute his orders. It's super exciting. And to this day, I remember one story. They were talking about using some option strategy to hedge out one of their existing positions. And I'm just listening to them talk about it. And later that week, because I'm still in school, in class, we were talking about option strategy. It was crazy. It was surreal. So I'm learning it from a professional perspective, a real-time perspective. I'm hearing about it from an academic perspective, which was amazing. Over time, as an intern, I was exposed to more and more. The mentality there at York was truly sink or swim. Because it was so small, they expected everyone to be athletes, be a utility player, just get in and help out wherever you can. The one true characteristic that I learned during my time at York was grit. What really grit meant, having moxie, developing an incredibly strong work ethic. It's around you. So you have even Jamie working weekends. It was contagious. The long hours were normal. Everyone was doing it. We're all rowing in the same boat, same direction, same cadence. I had a mentor there during my time there, and he was amazing. He told me, he was a portfolio manager. He oversaw the credit book, and he told me the mantra that he lived by. And he said, hey, you have to understand the idea of acting like an owner. And it's something, Scott, to this day that I applied here at Beach Point. Acting as an owner is pretty simple. Pretend this place is your baby. Pretend you have to nurture it. Pretend you have to spend all the quality time growing it and making it better and being there. That whole mentality of running through walls came easy to me because once it's your baby, you're going to do it. You're going to do whatever it takes. One example he told me, like, you see a piece of paper in the hallway, pick it up, throw it out.
And why do people miss out on that? I think that's a really critical point for people to think like an owner.
To be honest, I think people just get too robotic in their day-to-day. I think they get taught something once or twice and they're told to stay in this compartment and do your job. And I think that on top of that, they're also not brought into the bigger scheme of things. They're not told the larger objective and what are we trying to achieve here? What are we trying to accomplish as the greater good? I think once you spend time in focusing on the greater good and our real purpose, I think then people feel aligned there. They feel like, oh, I got skin in the game here and I'm part of this success here. Over time at York, I continue to learn. I learned how to settle trades, book trades into their GL system, corporate action events. I helped produce their monthly NAV process. I worked with their auditors. And then upon graduating from PACE, they offered me a full-time position, which was amazing. I didn't think twice. I just jumped at the opportunity. My responsibilities grew pretty quickly because the firm was growing. And so I started backing up the traders to trade equities, which was phenomenal. A lot of stress, fun. I was super ignorant, so I didn't know what I was really getting into.
Don't make any errors.
Oh gosh, they pulled a big prank on me the first time I was on the desk, and they all had a good laugh over that. So it's literally market's about to close, and it was an easy day. I'm like, wow, we only executed 20, 30 trades, no problem. And then all of a sudden, I see Jamie and Dan Schwartz talking really quickly. And all of a sudden, Dan's like, buy me 400,000 shares of Ford. Buy me now, right now, now. It's literally like only a few seconds before the market closes. And I'm calling everybody just like, buy, not telling him it's Ford, hanging up the phone. And so I just see Jamie laughing there like, Darsh, we're just playing a prank on you. I'm like, yeah, this is great. And then I learned how to trade currencies as well, which was fun. Setting up new prime brokerage relationships. So during my 9.5 years there, the firm just grew exponentially. I mean, we went from managing $400 million, being less than 10 people, to over $12 billion in assets, over 100 people globally. We launched a credit strategy where we started trading bank loans, high-yield bonds, distressed debt. We launched a CDO. We got onto a UCITS platform. We launched the European strategy, and we got to set up shop in London, which was exciting because I played a role in that. We set up an Asian strategy as well. We had offices in Singapore and Hong Kong. I had a big role in helping with that as well. We launched a private equity vertical. During all those new launches, I'm also getting exposure to different markets geographically. So learning about how the Asian market works and their restricted currencies and regulatory rules around trading in the Hong Kong market. And then the same thing with London, and understanding there's prime brokerage coverage globally and having strong relationships there as well.
That first job, it was like highly successful organization. Like, what were the ingredients? How much was timing involved with it?
The strategy for Jamie and his executive team, it evolved. It went from merger arbitrage to more event-driven. And then from event-driven, it became multi-strategy. And so he was opportunistic seeing what's available to him in the market, and he pivoted pretty quickly. And the team was pretty lean at the time. We did a lot of stuff in-house. We didn't have so many accounts. So we organically grew the existing funds to get bigger and bigger. And I also think that everyone was aligned in the sense of we all kind of wanted to see get big. So we would have conversations on what will it take from my side of the business versus the front end side of the business to make it happen. It was truly a testament to the executive team and Jamie's eagerness to grow and leave a real legacy, I would say.
Very cool. And how long were you there for?
Close to 10 years.
Wow.
Can you believe it? Like my first job right out of school.
Amazing evolution there. And then why did you leave York?
After about 10 years there, my boss, who was the CFO, was an early partner there, and he wasn't going to leave. And I thought to myself, well, I still have ambition and I want to move up that corporate ladder, if you will. I wasn't actively looking. Here's a personal twist to this. So my wife is from Kansas, and we bought a home in Kansas just for investment purposes, but also for convenience. We would go back and forth often to go visit family. And so we thought, okay, well, why not buy this house? And when I bought this home, the person who sold me the home happened to have a connection with the CEO of a company called Bats. And can you believe that? And he just said, hey, you're from finance in New York City. This guy is in finance here in Kansas. You should hit it off. And at the very least, it could be a networking opportunity. And I wasn't going to really walk over and join another hedge fund. From my perspective, I was at York. York was phenomenal. I felt like it was a family to me. So I wasn't going to go across the street and join a hedge fund. Loyalty was really important to me. So this Bats opportunity kind of fell in my lap. And to give you some context, Bats is essentially a technology company serving the financial industry. And Bats, from a technical perspective, was an electronic communication network that became a fully licensed exchange in the US stock market in 2008, which is historic. It hadn't been done in years before that. And so I went out, spoke to the CEO a couple of times on the phone, made my way out there on just a day trip to visit him and his executive team, just to see if there was a there. I meet with him. We have an excellent conversation. I meet with his team. It's exciting. And this is the peak of high-frequency trading. And everyone's talking about high-frequency trading, co-location, and electronic trading had evolved so much from that point. One of the biggest projects I had worked at during my almost 10 years at York was bringing in an order management system. And then not only bringing in and implementing an order management system to capture trades and handle compliance, but then to actually take it to the next step and electronically trade orders. So getting away from telephones and using electronic fixed protocol to do that. And so I had already kind of gotten the bug to do something like this at a grander scale. I remember sitting on the plane heading home, and before the plane took off, I called my wife. I'm like, I think we're moving to Kansas, Christy. And she's like, really? And I'm like, we're doing it. We're going. And it just felt right. And at that time, we had 2 little ones. So raising children in Manhattan is pretty tough. So we thought, why not give this a go? It's a small company. They had less than 50 people. Again, like a small company kind of feel. And I was initially part of a team to help establish their compliance department. So being a software company focused on handling large volume of electronic trades, they create matching engines. So I'm surrounded by the most talented software engineers and software developers in the world. IT department is top tier. I got to help establish their compliance department. And my job initially was to create algorithms with the help of the software developers to create algorithms to detect anomalies that were happening on their matching engines. So in other words, looking to see who's gaming their systems, front running, marking the close, or spoofing. And it was tons of fun just to be around that and to see the evolution of trading. These are software developers that their core job was to shave off milliseconds off of transactions. And so I went from pure hedge fund environment to understand how fundamentally they decide to put on positions, help build their infrastructure to grow. And now I'm working for a technology company servicing the financial industry. Once Bats went from an ECN to a licensed exchange in the US markets, he came over to me and said, hey, I think I want to create an index. And I said, sure. Like, what does that look like? And we got together and created a small team of people to do this project on the side. I worked on it for a year, and we created what's called the BATS 1000, which was then patented to go along with the exchange that we had just created, which was, again, a super experience to work alongside of a CEO that manages a technology company. One area that I learned quite a bit from working within a technology company is how that executive manages a team in that industry versus how Jamie and the other executives manage a hedge fund. It's so different. And it goes back to what you said, like, how do you get people to buy in? My time there was a little less than 3 years because the CEO was focused on taking the company public. But then I had the itch to go back into the hedge fund community, the hedge fund arena. And so my wife and I spoke again, and we thought maybe we'll go back east. I spoke to a couple of hedge funds out there, good conversations. But then a good friend of mine who happened to be a recruiter told me about an opportunity in Santa Monica, California. I was like, in California, really? I'm like, I don't know about California. And he said, you should go talk to them. I spoke to a few executives at Beach Point over the phone, and they invited me out to fly out and spend a day with them.
Was it for the COO role or something different?
It was actually for operations and a CRO. So they wanted a chief risk officer with also an operational background. So from my experience working at BATS, I wasn't a black belt in technology, but I understood technology really well. From my time at York, I learned a lot about building a hedge fund business. When I joined Beach Point, the firm was managing roughly $5 billion in AUM, give or take. And there were 40 employees at the firm, managing 16 different accounts. Some SMAs, some commingled. And today, fast forward, I've been here for 14 years. We manage close to $17 billion in assets. We have approximately over 160 employees, and we manage 62 different accounts. So these are SMAs, single client funds, commingled funds, and committed drawdown funds.
And on the CRO side, like, what's the definition of the CRO for Beach Point?
The definition initially, Scott, was, hey, Darshan, you're coming in from working at York Capital Management. It's a premier hedge fund, highly regarded. My bosses, Scott and Carl, were like, hey, as a CRO, we literally want you to just take a look at everything we're doing, soup to nuts, and tell us what we need to make better, to make improvements on. And I love that. It's like, wait a minute. So you're telling me to go in and see what you're doing and see if I can make it better. And I got to tell you, I was lucky because we had such strong people here at the firm already, such as our CFO and our CCO, being ready to accept me into the ranks and work with me. So now to answer your question, it was initially just starting off doing an internal audit. So my job was to take a look at processes, procedures, the systems that we're using, service providers. We're looking at how trades were being executed, everything, front to back. And so from my perspective, it's like, okay, well, I'm going to focus on the back first and then make my way up to the front. And something that Beach Point had done from the very beginning was outsource their middle office. When Beach Point spun out from their predecessor firm, they had moved over to the mutual fund division at State Street. And that side of the business really didn't understand how we handled our trades and our strategies. And so they had a very little knowledge base. So from my perspective, when I joined, my first task was to look at them and say, okay, well, I evaluated them, I went out to visit them, and I just knew that we were on the wrong side of the fence. And so for my job was to brick by brick, take it down and rebuild it and make changes both internally and externally. So one of the changes I made was move us away from the mutual side division within State Street and move us over to the IFS side. And they're more accustomed to serving hedge funds. It was a clean fit for us. From a risk perspective, it's grown from initial internal audit responsibility to now building a risk program. And that was the next step that I did. And that meant setting up a program to really focus on enterprise risk. We focused on 3 different pillars. We focused on portfolio risk. We focused on infrastructure risk and operational risk. Portfolio risk is portfolio risk. Infrastructure risk is mostly like data validation, business continuity, In network security, cybersecurity, digital and brand reputation, that's come up quite a bit. And operational risk is key person risk, processes and procedures. Are we automating? Are we leveraging technology enough? Cash controls, things like that. From a portfolio risk perspective, I'm not a quant. I'm not going to sit there and tell them how to construct a portfolio. But what I did do was hire someone who has that skill set and is a quant. And my risk manager, who's phenomenal, has used the power of technology here within Beachpoint to build tools such as an automated model to do attribution contribution and to sit with portfolio managers in the investment team to help them think of things within their portfolios that maybe they're not looking at every single day. So he works with them from a portfolio construction perspective, and he uses the right systems. From my perspective is I got to give these guys the right tech stack in order for them to do their job, and them being the investment team. So my job is to give them more arrows in their quiver, if you will. So give them the right systems, the right analytics, the right data feeds, and determine what information needs to be real time versus it can wait until end of day.
When you're thinking about making these changes, any advice for people on the tech stack? What's the moment that makes you think I need to make a modification and we need to go out to RFP or see what our options are?
My first initial advice would be invest in setting up a true risk program first. I think people sometimes get caught up on compartmentalizing their needs. I think there needs to be what I call macro micro. You need to have someone who's able to get in the weeds, but also have the wherewithal to pull themselves out of the weeds and think at the bigger picture. And I do that every single day. And so I'm getting pulled into nav issues that are happening, but then I get pulled into more macro discussions around the strategic play of Beachpoint. So the advice I would give them is truly think about setting up a proper risk program from the onset, especially if they're growing. Have a dedicated person thinking about firm-wide risk, not just portfolio risk. Again, there's so many risks throughout the organization that are important. I think firms sometimes say, hey, we have our CFO, we have our COO, we have a GC. They all know about their risks, but you really need someone to be the glue to bring it all together and have a conversation about that together holistically, because you're really talking about the enterprise value of the firm.
Based on that framework, do you bring over that knowledge that you got from your BATS experience by saying like, hey, let's have a conversation about what went wrong and unpack that and figure out how do we make sure this never happens again?
It's an important piece to management. From my days of being a terrible manager when I was at York, I was so young and it was a maturation process to now where I am today. I think there's a strong balance between having some humility that, hey, something went wrong here. Let's huddle up. I'm not saying that Beachpoint conducts their meetings just like BATS did, but I do think that we are such a flat organization. Even our owners, we can walk into our owners at any given point, at any level that you're at Beachpoint and have a conversation. So yes, I think it is incredibly important to have postmortems. What we also do in addition to postmortems is invest in our people. You have to spend time talking and training your people when mistakes happen. Nothing's going to be perfect. To sit down and talk about what went wrong. Is it a systemic issue? Can we replicate it again? If we can, how long did it go on for? We want to be able to say, oh, there are mistakes. Let's make sure we catch them pretty quickly and that they don't linger.
Very cool. And maybe to back up a little bit. So we talked about risk. Give us an overview of, you're also the COO, and like what areas of responsibility you have and what that covers, since every COO is a little bit different.
Beachpoint is a multi-strategy investment manager specializing in high-yield bonds, bank loans, private credit, and distressed debt investing. As we've grown, we've added additional strategies to the mix. We've added structured credit. We've created a CLO platform. We launched a private equity. We also have a real estate arm as well. And we have a private lending vehicle as well. And as COO, I oversee a number of different departments. I have operations, portfolio accounting, data management, risk management, and technology. You know, technology is broken into 3 different categories here. We have software development, we have information systems, and information security. Luckily for me, I'm only as good as my team, and my team is phenomenal. I have solid lieutenants in each of my areas. We spend a lot of time planning. The line I often use is, You have to have foresight. I want each of my people to have foresight. So don't think in a vacuum, think bigger. And so what we've done here successfully is we built a platform to sustain a $30 billion business. And that is through a lot of teamwork and foresight. I think that we spend a lot of time developing our people and investing in our people and making sure that there's alignment there. We talk about plate management a lot, Scott, and my lieutenants, we huddle up. So we have these meetings throughout the week. We have leadership meetings, we have start of day meetings, we have end of day meetings, and each of these meetings in each of my areas could be different. So my CTO that leads his meetings in software development look very different than my head of global operations leading his operations meeting. But I'm sitting in almost all of them. I'm the COO. I feel like I need to be in the know from time to time. So it's that whole macro micro piece. Plate management comes in handy. I explain to my managers and my lieutenants often, say, there's got to be a piece of your plate that's dedicated in a third managing your team, a third de-risking, right? Then you have your day-to-day, and then a portion to think about, okay, how do we get better? How do we improve? That management piece, Scott, I would say has become a more prominent piece. Managing people is a full-time job.
As you get into coaching people and giving advice to people to be a leader, is there something, do you send them off to conferences? How do you help people navigate that?
The culture that Scott and Carl have created here is incredible. It's one tied to camaraderie as well as collaboration. And it's not a territorial environment at all. Let me give you an example. If there's someone who's interested in learning more about the CLO platform or the securitization that's involved in that, we have people that can come in from the back office, whether it's accounting or fund accounting or operations or data management, in those meetings and say, hey, can I learn about this stuff? We're invited to sit onto investment research meetings or trade recap meetings that are happening in the morning, what the traders are seeing in the markets. So it's all open. And again, it couldn't really exist if you were living in a pretty territorial environment where there were sharp elbows, if you will. And so I'd say we've spent a lot of time trying to educate our people. Because we are so lean here, Scott, because we outsource so much, it's important for us to have athletes. We hire people with high aptitude, the right attitude, and willingness to actually grow along the way. So one thing we've done quite a bit is lunch and learns. Throughout the organization, we try to do weekly lunch and learns where we invite anybody that wants to attend to talk about whatever topic someone's presenting on. So it could be as simple as, hey, we're going to educate people on how the bank debt settlement process works. Or more complex about like, hey, we're going to talk to you about the Dublin tax structure that we've created and that will be led by our head of tax. We'll talk about the valuation process. Or someone will talk about, hey, on an investment team, this is how we go about putting a position on. We just recently had one for my ops team about how do they go about raising money? What's that lifespan look like?
Yeah. And is it hard to do? You have 160 odd people. Is that hard to execute at that level?
Not so much. If you were to ask me what piece that needs to be the most prominent piece in managing, it would be communication. Communicating it. Put it out there. If you're doing a lunch and learn, let everyone know. And try to be mindful about those people in the global regions that they can sit in and listen. Try to make it accommodate their time. We try to do a better job on recording these lunch and learns so that they can be shared as well.
And you mentioned these other offices. Tell me more about that.
Yeah. So over time, as we've expanded more strategies, we've opened up offices in London and Dublin. I have an operations person in Dublin helping out with that strategy. And London office is mostly research folks and a couple marketing people. And for Beach Point, in my experience with the global offices here, it's a little plug and play. I don't have to worry about it as much. I do think I learned quite a bit from my York days, particularly because the York platform, we traded a lot out of those different geographic regions. So in my Hong Kong office, in Singapore office, and London office, there were some serious pain points along the way. I can reflect back on some where I made a few mistakes. When we started opening up offices in Hong Kong and Singapore, we started talking to people locally to come on board. But what we quickly realized is what we're doing is we're losing the York way of doing things. And so we noticed that out of sight, out of mind. We weren't having these regular calls, and Zoom at the time wasn't there. we really quickly learned through some real hiccups that we need to have boots on the ground from a York perspective. So what I did from an operational perspective at York was I created a rotation program, and I managed using meritocracy. So that's my management tool, if you will, or skill. And meritocracy is pretty simple. If I've got people running through walls, doing an exceptional job on the work that I'm giving them, I'm going to reward them with more challenging work along the way. And of course, align them from a compensation perspective as well, and give them a true trajectory. Meritocracy works. And one way it worked at York was I communicated that program that I wanted to put in place, that rotation program, and said, hey, if you are able to do this and you're showing that you have the willingness and the work ethic, I'm going to rotate you in and out of those offices and spend several weeks or a month. And it was super successful because what it did there was it bridged the gap. And so something I say often here at Beach Point is, let's build bridges. Let's constantly build bridges.
With hiring, how do you think about the right ratio of investment people to operation people?
As a COO, I'm privy to having conversations from a strategic perspective, along with from an executive management perspective. So I'm in the room when they're talking about, hey guys, we're looking to expand and create a CLO platform, or we're looking to launch this lending business out of Dublin. So what does that look like? So from my perspective is just communicate to me what you're thinking. Give me some runway to plan accordingly. And if I'm brought in at the 11th hour and you're telling me to scramble, well, that's where mistakes happen. And I think it's just the trust and the courtesy, if you will, to keep me in a know, along with their CFO and our CCO, to keep them in a know as to what's percolating from the founder's perspective. What are they thinking? It's important, I think, that we over-communicate. I'd rather have more emails on it than less emails.
And then on the outsourcing piece, what else do you outsource other than the middle office?
It's mostly the middle office. We outsource the daily portfolio accounting piece, meaning daily cash position reconciliations. We outsource the treasury component, meaning collateral management. We outsource the handling of pricing and performance for each of our accounts. So I have about 30 some odd people working for me on our accounts at State Street IFS. And here's the key. Just because we outsource them, that doesn't mean that we forget about them. I think of those 30 people as an extension to my team, which is incredibly important for anyone considering outsourcing. You have to treat them as an extension of your team. So let me give you an example. Something that we do often is we conduct due diligence meetings on an annual basis. So I go myself and I meet with the entire executive team as well as the staff. And then separately, my head of global operations does the same thing. We have regular report card meetings every month. We have conversations about what went wrong, what went well the previous month when we cut the NAV. What kind of technology are you working on? So for instance, right now, one major project that we're working on is IFS is moving away from their proprietary general ledger system and moving over to Geneva. And so that's going to take proper planning on everyone's part to get on board to doing that. So we have constant conversations, again, building bridges to making sure that the conduit between ourselves and them is tight. We link that work and we create this doer-reviewer concept. What I mean by that is let them do the work, and my lean team here of athletes and experienced individuals will review the work. Well, that can only happen if we're actually getting their data. And so one major project I worked on during my first 2 years at Beach Point was understanding where all their data sat. Where was all the data resting? And we had data in Excel spreadsheets. We had data in separate systems. We had data sitting in emails. And so my job was to say, okay, well, first that's got to change. Luckily for me, I hired an incredibly talented software developer. It was a brand new department that I created. And so he and I tackled hiring a service provider to help us build a golden copy security master and data warehouse.
Wow. And what's the name of that group that you created?
We're licensing that software from a company called MIK Fund Services. And my department and software development, they're the handshake. So they make sure that those files that we get every day from our State Street IFS relationship comes in every day. We also have a fund administrator for our funds. That's our official books and records. That's Bank of New York. Every day we're getting data feeds from Bank of New York as well. So we're getting data feeds from Bank of New York, and we're getting data feeds from IFS. to actually capture into our data mart. The idea there was, if I have an outsourcing relationship, that's phenomenal, wonderful, it's helping me scale. But the one concern I have is, what if they just decide to pull the plug and say, we're not in this business anymore? Well, that's a concern of mine.
Very much.
I want to own that data myself. I don't want to have to work with them as they're departing to try to capture all my data. So what we've done here is we've accumulated terabytes of data. We have about 9 terabytes of data. And what I was taught too from my technology team is, just to give you some context here, it would take 700,000 floppy disks to give you 1 terabyte. So
you might have to tell somebody what a floppy disk is for somebody who's listening. How rare is it for you guys to bring all that data in-house? My experience in the sense is that a lot of people just rely on the third party to have the data, but you guys made this conscious decision to bring that house. Is that different?
From my experience, yeah. I've talked to due diligence groups that come through here when we deal with consultants and investors themselves. And these guys are meeting with other hedge funds all the time. So they ask us similar questions. What made you do that? And listen, I think some of it is dumb luck on my part, to be honest with you. But that luck's paid out immensely, because I think that now, if I had an issue with State Street or an issue with anybody else that was plugging into my data mart, I would just unplug them. I still have the continuity of my data. So I have all of my performance data. I have all of my accounting transaction data at the tax level data. I have index data coming into my warehouse. I have risk analytics data. I have my what we call BPC attributes coming into my data warehouse. So all this stuff is getting funneled into the warehouse so that I don't have to be at the mercy of anybody in case something happens. I do think it's common now more than before. When I did it back in 2012, not many hedge funds were doing it. In fact, I remember talking to MIK when we were negotiating our agreement. We were their first West Coast presence. And so that helped us a lot, knowing that not many people are doing this. And now what we've done off of that data warehouse, Scott, is use the power of technologies that I learned at BATS and leverage off of that. So it went from taking disparate data points in Excel spreadsheets, compartmentalizing it into one vat, if you will, one mart. And now what we did was, fast forward a couple of years from that, we built thousands of custom reports off of that. So the needs of our investment team and just the firm holistically was increasing. And so they wanted more and more. And so we built more and more custom reports from that. Then we fast forward again and we see this evolve again. And our investment team is like, this is great. You're sending me a report on performance, but now I kind of want to slice and dice it myself. I want to see more real-time data. So then what we did next was we built our own proprietary management tool called Beacon. And the Beacon is, I'm super proud of what we've done there. The software development now, which is 10 people deep, built it from scratch. It was homegrown. Beacon was a system that serves front to back, holistically, the company. Without having a strong technology team and having a team on the front end of the business, meaning the investment team, being open and not territorial about taking something that they're working on and automating it for them. That's something that's so exciting, to be around people that are like, hey, it just takes me 3-4 hours a day to do, or 12 hours a week to do. Can you take it away from me and automate it? I think from a person who was more territorial, that's not going to happen. And that, again, is a testament to the culture.
On the buy versus build decision, did you guys go out in the market and say, like, here's our need, let's see what's out there? And then was that part of the discussion before you decide to undertake this massive initiative?
Absolutely. We call it buy, build, or cobble. And the buy is pretty simple. It's off the shelf, what's available to us. Build is, again, it's pretty simple. Can we do it homegrown? And the cobble is, well, let's like, we have our order management system. We use Ascastle. We have a risk system called Risk Metrics. Can we put them together and cobble it together to make it maybe more of a customized use case for us to achieve what we're trying to achieve? So that is certainly the tactic I use to go about this, because the last thing I want to do is spin our wheels to recreate a wheel that already exists. So we did look at a number of systems. I spent a lot of time looking at a lot of off-the-shelf systems. We demoed it internally. We had some of our investment team sit in. We talked to peers as well. That's something that I do often. And luckily, from where I sit on my side of the fence, there are COOs that are willing to talk to me and talk to me about their successes and some of their failures, which is nice. In this case, we did spend a lot of time whiteboarding the pros and cons of doing something like this. Is it cost efficient? Is it a good use case for our resources? And our resources are pretty limited because even though I have 10 software developers, they're not just working on Beacon and creating custom reports. They're actually building heat maps for the compliance team. They're building relative value analytics for my high yield bank loan team. They're building automation elsewhere. So they're helping the larger enterprise as well. So when we look at build, buy, and cobble, we really take a fair, honest look at what's in the best interest of the firm.
And then how do you prioritize all those things?
Yeah, it's hard. So it goes back to managing. It goes back to making sure that we're meeting regularly, and we're not meeting for hours. It's a waste of time. We set up daily scrums that we'll have a 15-minute conversation on the highest priorities that everyone's talking about. And we pause and say, okay, do those priorities match the priorities of the executive team? If we've accomplished these projects, are they the high priority items that now we can check off the box and move on to the next? So we have real discussions about the larger use case and where BeachPoint is heading. And then we work down. It's not always easy because there are certain, we'll call them drive-bys that happen where someone will ask for some automated work on a model or a report that we'll have to jump off something more pressing to do it really quickly. But we do. It's just about managing expectations. We use tools such as Airtable to manage all of our projects and assignments. And one big piece, Scott, I would say in meetings is, it sounds so trivial when you say it out loud, but takeaways. So when a meeting ends, having someone in a room, keeping proper notes about what's being said. And if someone says, oh, I'll have that done by next week, let's make sure that's noted somewhere in Airtable. And we have a proper agenda to say, okay, next week he said that this was going to get done. Is it done?
We talked about this as we were kind of planning for this conversation about how COVID impacted management in general. Would love to pick that up again and get your thoughts on that.
To be honest, we didn't skip a beat. I'm very proud to say that because we were already outsourcing. We already had a lean team. And the way we approach management, we just over-communicate. We have great tools for management purposes. We communicate to the point where everyone knows what their tasks are. And when you have an outsourced relationship, making sure that they have the right program in place for handling COVID. I think EQ played a big role, though, from a manager perspective, Scott. I think recognizing that everyone just went through a pretty traumatic experience. And so slowing that down for a moment, where maybe something critical is happening, there's a big new launch of a fund or a new deal has to be funded pretty quickly, recognizing and having some empathy along the way and say, okay, well, we don't know what's happening in these people's personal lives. So let's be thoughtful about that as we ask them to do more for us. So I think having a real patient approach to dealing with that was instrumental for me. But communication, over-communicating, again, what's the worst that can happen if you have another email in your email box? I think that the core focus stayed the same. Be sure you're available. Make sure there's productivity and reliability. And for us, COVID was slightly different because we all dealt with COVID and it was scary. But for me, I always had the challenge of being on the West Coast and dealing with LA traffic. LA traffic is terrible. After COVID was done, we all sat down together. My leadership team, my lieutenants, and luckily for us, our owners were really open to hearing about what we had to say about how do we want to handle return to work. For instance, I'll give you an example. My software development team lives pretty far out. And so sometimes it could take them 3 hours round trip to get home, come to office and return home. And so I'm like, is that really smart of us to have our people be in a car for 3 hours a day? So we thought, well, we don't need our software developers to be here every single day. Let them come in once a week. And that week, there should be agendas, real clear lines of what's the intent of having them here today. Let's have whiteboarding sessions about what's open. If they need to meet with business side people, let's do that. But the other 4 days, they're working from home. What we've naturally seen from this, Scott, is that there's more willingness to pick up the phone or respond to an email on a Saturday and Sunday. There's a more willingness to say, oh, I've got some coding to do. I can pick it up on a weekend. And it's because it's kind of like, I understand what you're going through. I understand the commute, but I have these things here from a business side that need to get done. So I think there's just natural understanding and respect and willingness to go the extra mile.
Darshan, this has been really insightful and love the insight. We like to leave with two questions. And the first one is, what advice would you give to an emerging manager from an operational perspective?
Already mentioned earlier, but truly invest in thinking about your firm from an institutional perspective. Just because you might be small in number of people or number of accounts, but have the foresight to think forward. Don't hesitate to plan ahead. So you're not playing the catch-up game when you do get big, right? You don't want to fall into the trap of saying, oh gosh, I don't really have a manager here. I mean, it's a unicorn. We don't often see hedge fund managers being incredibly talented managers of people either. And you see it often sometimes in their unicorns, but the smart ones will have the right managers in place to manage people. So I'd say start investing in people. Start investing in people with management skills. Plan on growth, discuss growth, be open about what you think the firm's going to be like. Have the harder conversations talking about scale. What is it going to look like? Should we outsource? Is it economically beneficial for us to scale? Do we have the right infrastructures to scale? And I think also on top of that, if you scale and outsource, do we have the right people in the right seat? And also conducting an internal audit all the time and assessing that to fortify your business as it grows.
That's great. The other question I have is, what one book that you refer people?
So I read a lot of management books. The one book I read often, I have footnotes. It's highlighted often. It's Good to Great. It's pretty old. It's by Jim Collins. I just love the way he approached taking an organization from good to great. He focuses on having disciplined people, having a disciplined thought, and taking action. And I just love how he approaches that mindfulness and not hesitating from having difficult conversations. And Scott, I know you said one, but I think I got to mention another one. Another book my wife turned me on. It's called Radical Candor. And it's a book that I've given a lot of my leaders here at Beach Point. And it was written by Kim Scott. And it's a book about how to give feedback, how to receive feedback, and how to interpret the feedback that you've received. And it's truly a communications book. I find it very, very important and helpful.
Yeah, it's one of those things that you can evolve into. You don't really need annual performance reviews if you have Radical Candor.
I totally agree.
Yeah. Good stuff. Darshan, thanks for the time and look forward to staying in touch.
Absolutely. Thank you so much, Scott.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.